Good morning, traders and investors. Are you guys ready for another pre-market prep? Of course, we got another great day for you guys. We'll take a look. Has the Santa Claus rally already come and passed? We'll talk a little bit about that. We'll get into settlement versus trade date. Talk a little bit about what could be going on today. You might want to catch this one, team. Bitcoin talk. We'll get into Apple. We'll talk a little bit about JD and what's going on in China. We'll take a look at some lithium news in the hitting the tape today, and what could potentially be the next Supreme Court case that everyone will be watching. Of course, it's going to be all on AI, and then we'll get into some action. We got, of course, our guest today, Marc Chaikin, smash the like. We'll get into a little bit of Microsoft talk from Wedbush's best idea list in 24, and then I will give you guys a trade that I'm looking at, seasonality trade. Already on. We'll talk a little bit about it right here on Pre-Market Prep. You guys smash the like. It's time to rise and shine. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, traders, we can take a look at the markets. You guys know I'm not the biggest kind of rundown type of guy, but I'll run through it really quickly. You guys can see the Qs definitely getting a nice little spike overnight. SPY doing the same. Let's take a look at USO. A little bit of a pullback here. If I take a look at WTI, because that's what I focus on, we're trading at like 73.32s. Wondering if we start going into the 80s. We could see that gold had a pretty decent day, and it's had a pretty decent 2 days now. Let's see if this can continue this rally. Silver doing pretty well. And then Mara and some of these Bitcoin names definitely taking a hit, with Bitcoin taking a pullback today. We'll talk all about that right here, but let's get the show started. Let's bring on my man, Dennis Dick, of course. You ready to get to the market today, Dennis?
Always. We're always ready. We've got 2 days left in the year, 2 days to make our numbers. Let's make it happen, although the market's been pretty slow the last couple days. It is a holiday week, so it is slow. Santa Claus has kind of come to town, but it's not. It's more with a little moves here. The market's up in the last few days, but it's not just raining presents all over the place out of the sleigh here. It's been a quiet Santa Claus rally. We'll say that.
Let's, of course, get to some Bitcoin news. Dennis, you said that you saw a lot of action coming out of Cathie Wood. And so a lot of people are wondering what's going on in Bitcoin this morning. And there could be a couple things playing it to here, right? We're going to give a couple of outlooks. You guys out there, let us know what you guys think in the chat. Why do you guys think Bitcoin is down today? Of course, looks like Cathie did do some sales. Is that exactly what you saw there, Dennis?
Multiple things happening here. So one, I want to do this trade date versus settlement.
Let's talk a little bit about that.
Canada and a lot of other countries work off settlement date when they're figuring out the end of the year. So the end of the tax year for Canadians was yesterday, meaning they actually start a new trading year today because they work on settlement, which is 2-day settlement. So they work, the stocks trades that you buy or sell today will settle on January the 2nd, where U.S. investors and traders, the IRS, works on trade date. So you actually have 2 days left in your trading year. So that is a consideration here that a lot of the other, besides the U.S., I don't know other countries, but I know a lot, work on settlement. So if you're in another country, you might already be working on your new tax year. So what happens is sometimes you see early profit taking. Like Canadians can now, if they have, a 240% gain in NVIDIA, they can take it today and not pay tax for the full until 2024. So meaning, in the 2024 tax year. So that's one key difference. And I don't wonder if that plays a little bit into the crypto sell-off here today, because Bitcoin has had a pretty good year. You could now book gains if you're not in the U.S. Again, U.S. investors are working on trade dates, so there's 2 more days. But if you're Canadian or in a lot of these other countries, you're working on settlement date. And I'm fairly confident. And again, Bitcoin with settlement and all this other stuff might be different, but you've obviously got all the Bitcoin stocks. Coinbase, that's going to work off settlement date. Mara, those are going to work off settlement date. So I'm talking the Bitcoin stocks, and we're getting a pretty significant sell-off. So what I think a little bit is playing into it is you could see profit taking in some of these issues if you are Canadian or if you're in some of these others. The other issue we have here is Kathy Wood has sold her entire GBTC position here. Now, she did move some of that into BITO, so it's this movie. She's not completely done on crypto, but there was some commentary here that I think she was just, and I don't have it in front of me. I had it in front of me before, but there was some commentary that she was worrying about the run up and being a little bit too much too fast. So, I mean, it's been an impressive run for Bitcoin. You're definitely seeing some profit taking here this morning. There's always headlines. There's other headlines out there, I'm sure. But, you know, just a couple things to think about when you're trading is that if you're Canadian, you can actually book those gains, you know, and not pay tax until next year now.
And I think it's important to think about, right? I mean, as we continue riding high, there is going to be some people that want to take some profit, especially if you're a little bit concerned into what's going to happen into next year. I know that there's still a lot of positive in the market, but overall, I mean, these stocks have been running for a good while now, right? Since early November, and has had a huge run, like in a stock like Coinbase, 154% in just what? 1.9 months, 39 trading days. You got 154%.
Yeah.
I mean, that's ridiculous. At some point, guys, we got to expect the pullback. And so I'm not saying that you can't be in coin, right? Let's say if you got in there at 100, I understand why you're kind of holding in now. But like always, we need to be careful for pullbacks and starting to see some retracements in this space.
Well, it's about chasing, Mitch, and we talk on this show as I'm not a chaser. I like to wait for a pullback and then a consolidation period before striking again. But remember, we talked about this January effect. That is now obviously in play if you're Canadian. Now, again, you know, the majority of U.S. stocks are still traded by U.S. citizens. So they work off trade date, meaning there is still 2 more days left before they can push that taxes. So, but come January 2nd, just think about that. You're sitting on those NVIDIAs and those Microsoft and all those gains. You know, maybe there is a little bit of a January effect and maybe you get a pullback. And maybe what we're seeing today in crypto, in the crypto stocks, is a little bit of this January effect, a preview, if you will. And I think a lot of times what you see is leaders become laggards and laggards become leaders with that January effect. So we know, obviously, January 2nd. Is it January? Well, we got to go to the calendar because we've got January. I haven't even looked at the calendar. So January 1st, but yeah, falls on Monday. So we actually have that holiday. So January 2nd will be the first day. So January 2nd is the day where I'd be cautious being long a lot of these things. But, you know, maybe you should be cautious today if a lot of the other countries in the world can start booking profits now. So just keep that in mind. I'm not chasing the NVIDIAs and the Microsofts here at this point in time. Still long NVIDIA in the long-term portfolio. I don't think these are long-term effects here, but we got to be aware in January, sometimes the trends reverse, at least for a couple of weeks.
Man, that little shake yesterday in NVIDIA, that opening shake got me out, Dennis, and I wasn't able to hold on that NVIDIA trade. So I had to let go of that swing, and now it's to 496. I was seeing 500 before the end of the year.
I thought so too, but we're running out of a runway.
Yeah.
Two things, running out of a runway. And like I said, you know, some other countries can now book those gains. So that could put pressure on the stock here too. So I think if you're sitting in these things, I think you got to be cautious going to January. Again, I'm long in the long-term account, separate trading from long-term investing. But I do intend to actually maybe short some of these stocks, not NVIDIA maybe, but some of these stocks come in January. And it all depends. I mean, sometimes sometimes it just doesn't come into play. But it's been a pretty impressive year for a lot of stocks. I think there's a lot of people sitting on a lot of gains that are maybe hungry to take some of those gains. And if you were sitting back waiting, if you're in the US, you probably wait a couple more days. But if you're in Canada, you're going to take those gains maybe today.
All right. Well, I have some interesting statistics that I want to bring in here, and I wanted to give the chat the opportunity to order their own Stock Traders Almanac for 2024, right? Of course, we bring Jeffrey Hirsch on all the time, and there's some statistics here that I think are pretty interesting, right? Of course, we kind of all know about the traders feasting on small stocks, Thanksgiving through the Santa Claus rally. And we've been seeing a lot of that lately. I know Dennis and I have even been watching some really smaller names, right, that are starting to get the move, right? And I think that just plays into exactly what we're seeing. But another thing is to keep in mind is that on average, it's only a 1.3% gain since 1969, right? And if we think about that in perspective and we look at that kind of like on the SPY, or maybe you're looking at the Qs overall, Qs is what I've been focusing on more because it feels like tech is what's leading this rally. We were at 409. And that was on Friday, right, where we opened. If I put a 1.3% move from that kind of 409 spot and I put it up there, what do I get? I get about like 414, right? Maybe a little bit higher, but not even into 415. And so one thing that I would say is we're already at 412s. We might have maybe a couple more points on average for this Santa Claus rally, but it's starting to slow down. And that's what I think we got to be a little bit careful of. And then there's one more statistics that I wanted to bring, and this is all from the Stock Traders Almanac. This is an interesting one. And it has it on the last day of the year, warning you for next year, right? But the last trading day of the year, the NASDAQ is down 17 of the last 23 times. So just to give that in perspective, the last trading day, a lot of the times is down on the year. And if we're already close to that 1.3% for the Santa Claus rally, that's what I'm saying. Maybe Santa Claus has already.
Yeah, I think it's time to start thinking about booking profits again. As a Canadian, you can safely book profits here today. In the US, are you going to wait a couple days to push that tax bill? Probably, but it's something to think about. I don't wait around for those last couple days of January, because sometimes those last couple days of January, trends reverse. But, nothing has to happen. Nothing is absolute. We don't know anything for certain. As traders, we only play the percentages. So, that's why we bring up these points. Mitch is bringing up some fantastic points. It's good to look at, these statistics to get a feel for what is actually happening here. And the January effect is already starting to happen with some stocks. We've been talking about this. Leaders becoming laggards, laggards becoming leaders. While China, which has been a laggard all year, becoming a major leader here today, Money Mitch. We're getting a big pop from China. There is news here over in China.
Yeah.
I had it open and I've lost it already. There was the China Central Bank comments, and
you go ahead and you grab those comments.
quickly.
I'll bring in the JD talk also, because there is some news out
go ahead.
on
I'll grab those
JDs.
China comments.
Awesome. Let's take a look at this. Of course, I'll go to JD's chart to kind of show what's going on, at least for JD. So the Chinese e-commerce, of course, JD.com has disclosed plans for a significant salary increase for its workforce in 2024. The pay increasing exceeding 20%, as disclosed in a company statement on its official WeChat account. So, of course, higher pay for this company, but getting a lift off of that. That I thought was really interesting. But there's also other news. And what did you catch out on the tape for China, Dennis?
Commentary from the China Central Bank saying they're committed to strengthening the implementation of its monetary policies, maintaining reasonable sufficient liquidity, guiding reasonable growth, aiming to support economic stability and growth. So that's helping China stocks here this morning as well. Again, we're just beaten down here too. So I think seasonality plays into effect here, where I do believe you're going to see a period here for the next couple of weeks where the leadership might change. And you're going to see a lot of rotation here happening. I don't think we're going to get an overall market rug pull, although if the mega cap 7 gets hit, the S&Ps and the Qs are going to get hit because they're so heavily weighted, those stocks. So again, seasonality plays into effect here. Lots to think about. Just keep that in mind when you're trading here. You can't stop yourself. You got to buy Microsoft or Nvidia by the end of the year. I think there's going to be a better entry point for some of these stocks.
I will say there is one last stat that I'll bring you guys. Is the second trading day of the year. The Dow is up 21 of the last 30 times. And so the Dow, DIA, maybe we have to look into what's in there that maybe could get going on the second trading day.
Again, heavily weighted to certain stocks, only 30 in there. So you got to consider that. There is a number of tech stocks in there now as well.
Yeah.
So the Dow is not like what it used to be, this huge value index. It's mainly just, and we can go, if you want to just break it down here, let's just jump into it right now and look exactly, which stocks, are the most heavily weighted. I believe, and I never trade the Dow. So I don't really ever trade the DIA either. So it's just interesting to look at. United Health, the most heavily weighted, 9% of the Dow.
UNH.
Goldman Sachs, Microsoft, Home Depot. Those are your 4 top components there in the Dow. And again, only 30 stocks. The lowest components there, We're talking about like the Intels. Intel's still in there. Wow. Disney is lower now because the price movements have just changed. So UNH, the biggest component here in the Dow and the DIA. If I'm looking at just the DIA,
Yeah.
and that's something to consider here too. Is there's just a different. And again, this is why I just don't like trading. It's only 30 stocks, so it can be heavily weighted. I mean, UNH has a bad day, the Dow gets hit. So it's price weighted. It's just the way it's all constructed here. It's just a mess, and that's why most traders, I think, just don't focus on it anymore. Not if you're a full-time trader.
Well, you guys
Media
heard
likes
this.
it though.
Well, you guys heard the stats there, brought to you, of course, by the Stock Traders Almanac. And I said, you know what? Let's expand this conversation. Let's talk about this, of course, with none other than Marc Chaikin. Let's get to the action, guys. Marc Chaikin, founder of Chaikin Analytics, and of course has seen many of these Santa Claus rally and January effects come into play, Marc. So what do you see going into seasonality? Do you kind of play into this? What are you seeing, Marc?
Well, the seasonality trade is over. Basically, it started the end of November, and we're witnessing the rewards from being a bull. The last 2 days to me are meaningless. What's important is what's going to happen in January, because Yale Hirsch's biggest call back in the 70s was whatever the market does in January is a roadmap for the rest of the year. So first 5 days are up. That means that 25% of the year is going to be up in the beginning and so forth. So I think January is really important, and I'm very bullish on January because of the earnings season announcements that are due to come.
That's truly interesting. Of course, we'll be watching the first quarter, as normally presidential cycles in the first quarter see a little bit of a slowdown, especially on election year. And I don't know. I mean, with this rosy market environment, are we going to see a little bit of a slowdown? It seems like stocks just want to keep running. Do you feel like the strength can just continue into next year, Marc?
Oh, yeah. I have a year-end target, or a goal that I'll share at the end of the broadcast, but it's numbers that you haven't been speaking unless you're Jeremy Siegel, 10 years ago. But basically, there are so many people like you and Dennis out there saying, be cautious, don't jump on the bull, wait for a pullback. I think the most you're going to, not most, but the likely pullback in the S&P is 1.5 to 3%. I'll say that almost any time we're in an uptrend. The 21-day average, which is typically supporting an uptrend, is 46.75. It's quite a bit away, but that equates to around a 3% pullback. But I think you did key in on one important thing: RSP, not SPY. The RSP went from being down 5% on October 30th to being up 12% on the year. So that's a 17% swing since October 30th in the average stock in the S&P. At the same time, as you point out, there's been a little bit of profit taking in the Magnificent Seven. So I think rather than looking at the Dow, I agree with Dennis, it's too constrained, although the Dow did make a new high ahead of the S&P, the cap-weighted S&P. So the rally is broadening out. And then the question is, what sectors are going to do well in 2024 in an election year after a big rate cut, not rate cut, but cut back in rate cycle. And, I've got some thoughts there too. So, shoot, fire away.
Yeah.
What I've been talking about is the leaders becoming laggards and the laggards becoming leaders for 2024. What we saw in 2023 was a complete reversal of what was happening in 2022, where January, the calendar changed and they could not stop buying tech stocks, and they bought them all year. To Hirsch's point, the first 5 days of January, I believe, are very strong, and that did continue the entire year. I mean, it's been a big move here for some of the small caps, but they have massively underperformed over the last couple of years here. I've been saying I think that's where I'm looking to buy pullbacks, is more in these value names, as opposed to if we get a little dip in, a 32 multiple Microsoft. I'm not sure I'm jumping in and chasing. I believe the AI story is real. I believe those stocks are still going to do fine. I'm kind of with you in that I think there's this potential for some of these other stocks which are trading, you know, and when we were talking about this back in October, I mean, we're just getting down to multiples on some stocks where they haven't traded in years back in October, where, you know, you got the IWM was, I think, trading 13 or 14 times earnings. I mean, just stocks is mainly getting too cheap when we got back to October, which is why, you know, we talked about in October of saying I think a recession is kind of priced in at this point in time. Now, I didn't anticipate this huge 20% up move in a lot of stocks and in the IWM overall. I mean, what are we up, you know, in the IWM from, you know, the October lows 160 204? Yeah, we're talking, you know, almost 20% move there as well. I do think, you know, you could get a pullback. I would be a buyer of that pullback. So I know we talk cautiously to our investors, but we started talking more bullish back in October. So to your point here, Mark, do you think this leader to laggard, laggard to leader trade could have weight in 2024?
Oh, very definitely. I think tech will do okay, not the biggest names, but the companies that are going to use AI to improve the productivity of their software, stocks like ServiceNow and Synopsys. You know, so I think I've been saying all along that the big, what we used to call the generals, NVIDIA, Microsoft, that's not where you're going to make your big money in AI. You're going to, there's a productivity cycle going on where profit margins are going up because companies are using things like AI. So I think those, let's call them secondary tech stocks, Arista Networks, another example of that, CrowdStrike, are going to do pretty well. But I think the real areas to watch are clearly financials. So I like to step back and just, I could quote 10 different patterns and events that have happened that tell me this market's going 5,800 to 6,000 in a best case scenario next year. And that's, you had a very steep drop in rates in a very short period of time. So as we've always talked about, and you guys have talked about, it's the rate of change of interest rates that's really the driver in the stock market, not the level. So from 5% down to 3.8% in a month and a half or 2 months, that's amazing. And Goldman Sachs has something called the Financial Conditions Index. And that has had a precipitous drop, which means that there's easing in the marketplace, not by the Fed, because they're still selling bonds, but by the market participants. 12 months later, the market's up every time that's happened, where you've had such a steep drop in interest rates and other conditions that they measured. The second thing is that chart you showed of the IWM, you recycled from a new 52-week high to a new 52-week low to a new 52-week high in an amazingly short period of time.
Unreal.
And that typically has led to 100% up gains, you know, 7 out of 7 times that that's happened, 6 to 12 months out. So the longer term picture, and by that I mean 6 to 12 months, is fabulous for the market. And then you had a point and figure breakout at 4,600. You know, not many people look at point and figure charts anymore, but so 3,500 low to 4,600 high gives you a 5,700 target. And that's just coming off a machine. That's, you know, if you look at any point and figure software, whether it's stockcharts.com or what have you, there's the count right there. In fact, the count is 58.99. I don't know, but it's based on a breakout of a double top on November 20th. So we're set up. Where do you look? Financials, big beneficiary, industrials, consumer discretionary, for sure. And I think you avoid energy, and I think you sort of underweight mega cap tech and you overweight specialty tech. And that's where you
talk about specialty tech. Which stocks? Give us a couple picks here.
That I mentioned, they look high right now. ServiceNow, Synopsys, Pure Storage, PSTG. They have a deal with NVIDIA. They're a big beneficiary of the need for flash storage. So a company like Procore, which we've mentioned here before, PCOR, they're the only competitor to Autodesk out there, and they're starting to integrate AI into their software for construction management, construction project management. So you can find these names in both software. I'd rather go to software than hardware here, but if I had to pick a chip manufacturer, it would be AMD, which is making new 52-week highs. So there's plenty to choose from here. I do think that you're going to get a pullback at some point. I can't tell you when. But you've had a magical run, and that's not a reason to be bearish. The McClellan oscillator has been in positive territory for 2 months. That only happens at the start of a new bull leg. So you've got a lot of stuff going on. Let me give you one anecdotal answer. I like anecdotal if it translates to, okay, you know something that someone doesn't know. I was watching before I came on air. I forgot that I hadn't reordered my Stock Traders Almanac. Two clicks on Amazon, and it's being delivered this afternoon.
That's unreal, eh?
So what does that mean? It means I'm not using as much gas and I'm not putting as much mileage on my cars. It's a productivity enhancer, bad for, the conventional bricks and mortar, bad for energy, but great for Amazon, great for anybody who's looking to maximize the experience, and that's what AI is all about. So
all right. So of course, the chat here also saying that they're feeling the bullishness, right? What can throw a wrench in this story, Mark, next year? Is it that the Fed maybe steps back a little bit on their comments that they just came out, or is there something that could break in the economy? What are you seeing out there?
Well, there's always something that could happen, but the problem is we never know what it is. So that's, if we knew what it is, the market discounts it. That's the conundrum you always have. So what could go wrong? The war in the Middle East could escalate into World War III, unlikely to happen, but Iran's a bad actor and they're getting frisky. Earnings could get too strong. And I personally am not basing my forecasts on what the Fed is like, how many rate cuts there are. There may be none, who knows? But market's pricing in, 6 rate cuts now, not 3 or 4, based on.
It was all the Powell conversation.
Yeah.
I mean, that's where I said, the same thing. I'm like, you can't stay bearish if Powell is going to get behind this market.
Right.
If he's going to start cutting rates when the markets that are at all-time highs, it's very hard to be bearish here. That's why we've been on the bullish train here, just, to correct you, Mark, because I know you think we're all bears here, but it's not.
No, trading. I get the trading rhythm, and I respect that. I can't do that very well.
But we're on the same side as you for 2024.
Yeah.
I mean, Powell, I said you cannot fight the Fed. And that is why it's been successful to have an underweight in equities really for the last 2 years. We haven't gone nowhere in equities for 2 years because you were fighting the Fed as they were cutting rates. Now it would have been nice to all, go bullish here, in October of last year. And, we'd be right at the bottom. But, there was a significant sell-off in the Qs. There was a significant sell-off in a lot of other stocks.
Hey, guys,
look at the explosion.
Let me interrupt for 1
highs.
second.
Okay.
Let me interrupt for 1 second,
news.
guys. No worries. I just want to make sure that we're alert for the initial jobless claims is going to come in here. Consensus is 210,000, prior being 205,000. I don't expect much movement in the market off of this, but I just wanted to state it for everyone in the chat. I see everybody. Numbers coming. Well, it's just jobless claims. We'll see what happens with that, but let's keep going. Mark, keep going with the conversation.
All right, the explosion in the number of stocks making new highs, the contraction in the number of stocks making new lows down to 3 or 4.
Yeah.
And what people don't realize is this is a rolling 52-week number. What happens in March when the lows that the bank stocks made go off the board? I mean, the odds of new lows picking up here, I'd rather look at what's going to go right. And you're going to have an explosion in all these technical indicators. First of all, the advanced decline line made a new high ahead of the S&P. That is the most bullish thing that can happen. And you still haven't made a new closing high in the S&P. The Dow leading the S&P is bullish. So it's hard for me to zero in on what could go wrong. I think you got to zero in on what could go right. We started doing that in November, and it's really paid off for people who've believed in this bull market. And I think this is a new leg of the bull market that's just started.
Well, it might just be getting started, because I just want to give perspective, because everybody is still thinking like this. It's just been an amazing run for stocks, and 2024 absolutely, or 2023 absolutely has. But what we did in 2023 was basically get most of the losses back from 2022. So when we really give perspective here, in 2 years, QQQ is flat. In 2 years, the S&P, I believe, is just trying now to get back to all-time highs. So I mean, it's taken 2 years. So we've had a 2-year bear market. Even though it was all losses were in 1 year, it was the last year that got it back. So I think Mark's got a point here. Like, we've had the huge sell-off with the Fed, with inflation, and the Fed fighting inflation. They brought interest rates back up. And now we've come full circle, and maybe we have clear skies here. If the Fed is going to start lowering rates, I think, you've got to now think that, hey, maybe the bear run is officially over, and maybe we're not going to retrace these lows if you're sitting on the bear camp.
So here's what could go wrong. That's a good question, Mitch. The March Fed meeting, they don't lower rates. Now you're going to have some disappointment in the bond market. The bond market's been driving the bus. I'm sure you guys have been talking about that for the last month.
Yeah.
And so if the Fed does not cut interest rates because the economy is stronger than expected in March, then you'll get a sell-off, and that makes sense. And
the reason I think we sell off, if we sell off, and I'm not saying that happens, but if you're giving the bearish scenario, it's if inflation starts ticking higher again. Because if inflation starts to tick higher again, the Fed will back off on their commentary from before. The market is very scared of inflation. So that's kind of the boogeyman. Inflation has to stay down. If we start ticking higher again, the bull thesis starts to get holes in it.
So here's what you watch for that. That's a really good point. If China's economy is in the crapper, this rally you talked about is just a short covering year-end rally because of the implosion in the Chinese real estate market. So if China, the growth in China actually drives the inflation rate. It drives the stuff that supply chains depend on. If China stays weak, there is virtually no chance that inflation ticks up. Virtually none. And the PPI definitely follows the Chinese economy. I mean, the correlation's unbelievable. So if producer prices are going to come down, the supply chain issues that COVID created, finally abate, which is what's happening here. I just don't see an uptick in inflation. And I'm not an economist, fortunately. So, I'm not stuck with some numbers that are archaic, like yield curves and leading indicators. So we've covered a lot of ground. That's about 3 weeks worth of my thinking because we missed a week. But I would like to wish you guys and all of the loyal viewers who are in here every other week, because hopefully I have something important to say. I wish you a happy, healthy, peaceful New Year's, and please vote. Whatever your political leanings are, vote in 2024 so that your voice is heard.
Love it, Mark. And just from all of us here, and I'm sure the audience would agree also, thank you for joining us. Like always, it's truly been an honor to have you on the show because as someone that, studies
legendary
markets,
investor, Marc Chaikin.
Yeah, literally. I can tell you, there's like at least 5 or 10 books back there that have your name in it. So I can tell you that I definitely enjoy being able to speak with you throughout the year. I know the chat loves it. So a lot of love for you. A lot of thanks in the chat. Have a great year next year, Mark. We expect great things from you in 24.
And I'll actually be on January 4th because we missed a beat.
Oh, excited.
We'll see you right in the middle of the new year.
Right in the middle of this.
Yeah, that'll be great. Enjoy, guys.
Have a great one. Take care, Mark. All right, let's get back to the markets here. Let's see how the markets reacted off of that jobless claims number. I didn't see much action at all on it. Did you see anything, Dennis? I mean,
no ticks. And we're in a very quiet week. Again, the Santa Claus rally, everybody likes to think everybody's coming. A lot of traders are just not here. And the reason we do get rallies sometimes is liquidity is lower because there's just not as much traders out here. So there can be some exaggerated moves because the liquidity is just lower. This is a very historically quiet week. A lot of traders take this week off. We've got Joel Elconin taking a couple of days off here. So, I never take days off, just the way I'm built. So, obviously when I work from home, it's easier for me. I just come in here, do a little bit of trading. So I trade through the holiday season, but a lot of traders are not like that. And this is usually a historically quiet week. What happens next week is all these traders get back to their desks. And again, I'm with Mark. I think it's going to be a good year for stocks in 2024, as long as inflation doesn't start to tick higher. The one thing that is different is I think we will get a pullback in January, an early pullback on profit taking. And I think that pullback is going to get bought. So I'll be sitting with my buy the dip shoes on in January, looking for good companies, again, at reasonable valuations. That's the key to trading or to investing. Is, obviously we always talk about, trading and investing are two very different things. But, have your shopping list ready, because you know what? Some of these stocks may sell off here. And when they do, you get that opportunity. You've got to be able to strike, because these sell-offs may not last long.
I agree. And I think you need to keep watching at least seasonality. I think it's pointing towards more like a March sell-off, like we kind of had even last year. We had a little bit. So I think that we could even continue the strength into January and then run into some trouble in end of February going into March. And that's when we start to see things kind of change.
That all depends on the data. That'll all depend on, and again, what this market will be spooked about is if inflation starts to tick higher, because that will derail all of these Fed cut predictions. I think it's
the consumer slowdown also, Dennis, because the consumer's been so resilient, right? If the consumer really breaks, that's when I think questions start to come up, because the consumer is what this country runs on, right? I mean, at the end of the day. And I'm thinking about it, and I wanted to bring a trade idea, so might as well just talk about it now.
Bring up some trade ideas. Let's go.
So this is going to be my big trade for next year, and I already have a little bit on it. I'm going to be adding throughout it, but I'm starting to think like, I called for retail seasonality to the upside at the end of October, and I rode that up. I wrote it with multiple names. But now I'm starting to flip on it, because seasonality actually puts these retail stocks running into a little bit of a wall in January and February. February is still a little bit of a stronger retail month, so you got to be careful with that month. But January, usually seasonally weak. And so if I look at the XRT, if I look at retail names and I go to the daily chart and I see that this stock has just, the ETF, I was playing it at 59, guys, to give you guys perspective. It's run. I mean, that's a 25% run for the XRT. If you look at back when this thing kind of has that run, 19%, 26%, right? Another run here, 25%. There's not too much often that we run and we don't come down also in when? January. Look at January right here. This is January to March. All the way down, it came back down, right? And then if you look here, December, a run November, December, January, fall. Right? And if you look here, run into December, why not maybe get a fall into January? So I said, you know what? I'm going to go after the biggest name here, the beast of them all. And that's Abercrombie and Fitch also. I'm thinking here, I'm like, there's no way this thing should be at $91. So I'll compare it to a trade that I took last year that I will tell you guys, I got stopped out on it, that I literally was frustrated on it all year. And what was that? That was the Burlington trade. And I'll show you guys what I was looking at back then. And it was something else, right? I was honestly trading it right here on this day, when it had earnings right in early, this was at the end of March, at the end of February, going into March. And this thing came down all the way back down to the trend. So I'm thinking that we might get a similar
going
trend
with
here.
The IWM, like it was really moving with it, and so many stocks. And that's what we talked about back in September and October. And Mitch, you're bringing up some fantastic points here. Is we talked about all of these stocks coming back to their longer term support lines. When the IWM got there, at back to that 162, we talked about on the show, rewind and listen to the shows. We were like, a lot of bad news is priced in at this point in time. I don't think I thought it was going to be a 20% rally, but Burlington bottomed same time the rest of the market did. But to your point, Mitch, Burlington 120 to 196 in 2 months. I mean, if you are buying up here, there is absolutely no doubt that you are chasing. Now, are the chasers going to be rewarded? Mark seems to think so, that we're just going to continue to go up. I think we'll have a check back. I think we'll have a pullback and another opportunity. I do think by the end of the year, we could be higher, again, as long as inflation doesn't start to tick higher. Remember, as a trader, you have to change your mind. It's not, if you're a trader, it's not about holding to the thesis. If you're holding to your bull thesis, that's for long-term investing, and that's fine. You're a long-term investor. Know your time horizon. But if you're an active trader, You have to change your mind when you're given new information.
No.
Right now we have green light go, but again, I'm cautious for this first couple of weeks here because January, I think Mitch is going to be right. I think you're going to get a check back in some stocks. I like the Abercrombie and Fitch. We've been talking about the January effect from laggards becoming leaders. Well, what about leader becoming laggard here and A&F getting a lot of profit taking? Here was a stock Money Mitch bringing to you in April, May was $22 in May of this year. It's $91. This retailer, yes, with stores, not, an AI play. This retailer is up 350 some percent or whatever that adds up to in my head in the last 6 months. This is the definition of chasing. If you're buying here, this would be a stock I would think would get profit taking in January. And like I said, if you're Canadian, it might start today.
Yeah, and that's one thing that I'm just looking at, right, guys? Do I know anything? But this is how I've gotten the best trade ideas. I'm not doing this based on what everybody else is telling me. I'm doing it based on seasonality, history. And I'm looking around and thinking, we were already thinking this beforehand, Dennis, right? We thought that the consumer could stay strong through Santa Claus rally, but that in January and February, we would see some kind of slowdown in the consumer. I mentioned yesterday how 37% of the consumer went into debt during this holiday season because of the way that they're wanting to buy and consume. Well, aren't they going to run into a wall at some point? That's just my thinking, guys.
I think they do, but I think the Fed is behind the market, so it's hard to really get bearish. So I'm with Mark in this way, is that before the Powell speech, I was fully with you, Mitch, that the consumer is going to run out of money, or going to start to run out of money in 2024 because they've exhausted, credit card debts are record highs. They've exhausted their savings. They're going to start to slow down. They'll find the money to buy through Christmas. Me and Money Mitch were saying it's going to be a strong end of the year because people will find money to buy through Christmas. Then they'll slow her down, and that's a seasonality effect. They often do slow it down. But, when you look at the big picture here, the Fed is now behind this market. So if the consumer starts to slow down, that's more reason for the Fed to raise rates or lower rates even quicker. So, with the Fed behind the market now, it's hard to get really super bearish here. But I would be cautious for, a check back, a pullback, maybe some guidance cuts. FedEx guidance was not great. So we've seen some major companies already warning the consumer could slow down. So I think you could see that early pause in the consumer spending, but I think the Fed could reignite it again. And that's why I'm not getting real bearish like for the whole year. I think you could get a check back. And then I think eventually the consumer probably comes back, fairly strong if the Fed starts cutting rates. And that's what they'll do if we start getting the data to show that the consumer is actually slowing.
Let's go to Apple here as they're selling the watches. Who's getting their watch now? It's going to be back on the radar here. It's going to be back in stores on Wednesday and starting online, starting on Thursday. So Apple will be able to sell the latest Apple watches after an import ban was temporarily paused by appeal courts on Wednesday. Will this actually make an impact on Apple?
Again, this is one of your stocks that's had a pretty darn good 2023. Not as good as some of the other stocks, but we're talking about a stock that started the year down at 133, it's about 193. So is there going to be profit taking come the calendar turn? I tend to think so. Would I be a buyer on dip on Apple? Maybe. Apple's valuation has just been so high. That's why, I had it in my portfolio for 7 or 8 years. I've talked about this before. I had it when it was 12 times earnings, 13 times earnings, 15 times earnings. I sold it when it was 27 times earnings. I just felt it was overextended. So I felt like, this valuation here is just not nearly as attractive as it was back when it was trading 14 times earnings. So here we are, Apple. It's a value call for me. It's just fully valued. So can it go higher? Sure. If the markets go higher and multiples continue to expand, maybe earnings grow. But Apple has been growing earnings for a couple of years, so it's going to have to. It's an approve me stage really from an earnings perspective because the earnings growth really hasn't been there. It's been all multiple expansion this last move in Apple.
Let's keep going. Let's get to another conversation. Of course, I don't know if you guys saw yesterday. Of course, it was big conversation on what's going on in what could be the next big Supreme Court case, right? And that's, of course, on AI, as the New York Times has filed a lawsuit against ChatGPT's maker OpenAI and Microsoft, alleging the unauthorized use of copyrighted content by AI. And it's kind of interesting because at the same time, Apple is trying to do they're building their large language models, right? And they're writing checks to media companies to license their content for training models. So some people can view this as a way that Apple's kind of coming against Microsoft here and doing something different, right? Actually paying for the data or trying to get licenses for this data to go against the way that the model is in Microsoft, essentially maybe hitting OpenAI and giving them the right way to approach these large language models. And so this is going to be a battle here, guys. And I think this is going to go to the Supreme Court. I'm not the only one that thinks that this is going to go to the Supreme Court. And I think that this is going to be big implications on AI overall, right? And what do they want? They want in on the data. They want to know exactly where this data is coming from, where they're getting this information, because it's going to be very vital to the court case, right? And so I think that this also gives the government an in on AI.
I don't know anything about any of that. All I know is Microsoft is fully valued as well. It's a similar story to Apple. It's got to grow. I do think there's more of a growth story here because we know they're attacking, the AI a little bit heavier. Apple's obviously attacking in the background too, but they're a front run leader in AI. I think the AI story is not going away. That's why Microsoft, I think, continues to trade at a premium multiple here. I do think you could get a check back in the beginning of the year. I thought we could get up to all-time highs. I really did. Microsoft, it just hasn't transpired. This has been a buy everything else rally and not the Magnificent Seven for the last 2 weeks really here. I thought we'd get that run up into the end of the year. It hasn't materialized here yet, so I'm starting to think it isn't coming. It's up $1 here this morning. I liked it at 373 when I thought it could go to 382. I'd probably just be taking the profits and running here next. We're getting too close to the end of the year, and I think at the end of the year we get a check back in a lot of the Magnificent Seven, meaning the beginning of the year. And at the beginning of the year, I think that's going to happen.
Just to put in some adding conversation, Microsoft was on Wedbush's best idea list for 2024. So you can see how they feel about AI and Microsoft continuing moving forward. Dan Ives even maintained overweight rating, but increased price target to 450. Talking all about, of course, what are they talking about? And I love this comment, man. Dan Ives, man, out there. We view this as Microsoft's iPhone moment with AI, set to change the cloud growth and trajectory in Redmond for the next few years. Over the next 3 years, over 60% of Microsoft installed base of enterprise and commercial customers will likely be on Copilot AI functionality. He said, adding that it could augment to the company's revenue by about $25 billion in the fiscal year 25. So he's seeing it as Microsoft's iPhone moment. I mean, I think that's a big push.
And again,
that's a big push.
This is Dan Ives, who is a permabull.
Yeah.
He's a permabull. He's going to have strong targets. I mean, most of your analysts are permabulls. So, it takes, a lot. There's not a lot of analysts that come out here with sell side ratings. I mean, how many analysts have a sell on Microsoft? Can you look at that quickly in the background?
Yeah,
Mitch,
there's probably not a single one.
Like, is there any analysts that even have a sell rating on Microsoft? So, I mean, that's just what it is. The analyst community is always perma-bullish. I love Dan Ives. He's been right. Dan Ives has been absolutely correct here, for a lot of these stocks. There's going to be moments he's going to be wrong. But when you're perma-bullish and your long-term outlook, you usually end up being correct because the markets do tend to drift up over the course of time. So if you're long-term investors, it's good to listen to people like Dan Ives. I mean, Gene Munster was a long-term bullish Apple and still is forever. And I mean, look how much money you made if you were just blindly following, as an investor, you're just blindly following Gene Munster back in 2006, 2007. He was pitching Apple on CNBC relentlessly and absolutely ended up being right. You made a lot of money just following their calls. So if you're a long-term investor, some of these guys like Dan Ives and Gene Munster really will give you some good information. They follow these companies very closely. They're in tune with them. They're in with the stories, and the stories can stay hot for a very long time. With that being said, as a trader, you've got to be able to, bounce and go back and forth. Microsoft, its valuation scares me. I had it in the long-term portfolio for a long time as well. Again, the reason I sold a lot of stocks on my long-term portfolio was one, that I was worried about the interest rate scenario, interest rates going higher. That's when I sold them back earlier, and I sold a lot of these back in 2022. And, and the other thing, obviously, worrying about was full valuation. Stocks trading with P's of 30 are a lot more expensive than when, I was originally buying Microsoft, and I think it was trading with a PE of 20. So, it's all those considerations in there, but know your time frame, know your long term. I think Microsoft is going to be a big player in AI. I do believe the stock goes higher in the long term. I just think maybe you get a check back here early, maybe get another opportunity.
So se da que Mica Mineral de Chile is in the
my
news
gosh,
today.
Mitch, that's a phenomenal
SQM
accent.
here. Yeah, had to rock it there, right? Chilean, of course, is what's going on here is it's surging in the early sessions after the company agreed to jointly develop lithium. And this is according to Bloomberg. And so this is going to give them a nice little lift. This is giving a lot of lithium stocks a little bit of a lift. And if I think about what could happen next year, I think about what we're going to really be moving into is I don't see a good year for lithium for EV stocks like Tesla and your stocks like that, like Ford. But at some point, these lithium names are going to go. And I just continue to watch these. I don't have any long-term right now. I know that you've taken a shot on this, Dennis. I'll let you talk about it, whether it be ALB or some of the bigger names. What do you think about that story going into 24?
I think this is something to drive these stocks here today. So I do have a trading position on SQM. Just put a hedge on being short this and along some of the other lithium providers. Thought there might be a catch-up trade here. So still long ALB in the long-term portfolio. I got a short-term trade on and a couple of these other lithium providers. I think this is like a sneaky story that nobody's paying attention to. I think this is the reason a lot of these stocks were beaten up. And I think you could see a lift here just today, day trade. I think you could see a little lift in some of these stocks.
I think, this is one story that I always like to keep like themes in my head, like what kind of themes could be investments moving forward. Of course, there's lithium. You can think of even cannabis for maybe next year. Smaller names. I'm seeing SPACs come back, things like this. I'm always on the thematic kind of mentality and looking for this type of trade. Definitely has had a huge pullback on a lot of these names. I mean, when you think about it, ALB was at 300. It's gotten more than a 50% haircut, down 64%.
A lot of bad news priced in there.
Yeah, that's what I'm thinking, right?
But again, you got to look at the scenario where EV, Ford cutting back, do we need less lithium? I think there's still EV going, but are we in this scenario where, we were pricing in this huge movement to EVs and then this isn't materializing? Maybe we are under that scenario, and that's why a lot of these stocks have really been beat up. It's lots to consider, lots of balls to juggle here. I'm still on the ALB. I think there's a long-term story here. I'm still on the LTHM. I think there's a long-term story there, but it's been a terrible short-term story.
All right, let's do a little bit of ticker time, guys. I would say probably like the last ticker time of the year, but definitely smash the like, guys, and let us know what stocks are on your radar. Throw up some stocks. We can get through some of the ones that are out there. Dennis, anything on your radar here?
Yeah, again, so I've got my list, obviously, and I've been talking about that list, the January effect. It has grown tremendously. So if you want to see, this is my list for potential turnaround plays in the early January, but I also put ANF at the top of the list, Mitch, for the profit-taking one. I just added that one for you this morning here. But you can see January effect plays. I've got like Baba, Pfizer, SD.
Did you see that DM? Now it's in the 80s.
I got it in there. Did it already run on me? Is it running ahead?
God dang it, Dennis.
Running my trades. They front run my trades. I don't like that.
I'm looking at that one.
You
know what I did see though? That remember how yesterday Mitch Snyder was talking about Triple D, and I did see that in the space there's starting to be some acquisition talk. So I'm wondering if some of these eventually do get bought out, like she mentioned. So just keep your eyes on that. All these 3D names are definitely in the rut. I saw another one moving just a little bit. Bello. We'll see. One of the things is in the January effect, a lot of the times it's the names that were sold on the tax loss, right? Where they took those losses. And then usually those outperform going into the next year.
Yes.
So these are some things that I'm just going to be looking for, right? Do we know which one's going to be the one? We don't. But has there been some that have taken off? I mean, look at this chart.
Some are already running. Like, it's a tricky year. And again, here's China going up on us now, too. I was hoping this would happen January 2nd. Now you get a lift here today. The pot stocks set up interesting, though, Mitch, because they haven't really had a run. I mean, you got CGC sitting down in the lows. These are dumpster fires. I mean, they have been. Is there a
Everyone,
potential turnaround?
everyone hates on this trade, guys.
I
And
think there may be. I'm with you, Mitch. There may be a turnaround
dude,
story for early January. I will rent these stocks. I won't probably be long-term investing in these companies here, but I think as renting these stocks, I think there's a potential for an early January effect trade on these companies as well.
it's all going to depend on 280E, right? There's big implications if cannabis moves from Schedule 1 to Schedule 3. Keep your eyes open for that. And I've always said it. There will come a time when these OTC names like Trulieve, like Green Thumb, will move to the open markets, right? Move to the New York Stock Exchange, right? And when that moment happens, I think that's when we see the next big boom. I know I traded one boom of cannabis. I still expect to see another boom. The only question has been when. Yes, have they been losers since? Yes. That doesn't mean that you're not seeing some volume start to pile in here. Look at this volume. Look at the change in volume that's happened in MSOS. This is what it used to trade like. Now look at all that volume that's starting to pile in. What does this show me? And I'm starting to think about it is that I think some people are really seeing the late innings of the restriction and the battle against drugs going to change, and MSOS has a more positive future. That's just what I see.
I don't know long term, and I'm not on this show to predict long term. My prediction game is not that great in the long term, but I think short term, I'm with you. I think there could be a pop in pot stocks in January.
Yeah, I think it's just something to watch. It's
I hope
also
they don't front run it
cheaper
today.
names.
They're all front running these trades. I guess I'm supposed to do them all today. They're front running all these trades, suckers.
Yeah, I think in long term, well, we're going to see some kind of federal legalization overall. And if that does happen, you take the tax implications off some of these companies. There's actually some that are profitable, guys. They just need the slightest change in regulation, and they could really push on growth. To each his own if you guys don't want to watch it. All right, let's take a look from stocks from the chat here. I'm seeing a bunch of names rolling through there. So let's take a look at one of these. Let's do ADM. Archer Daniels Midland.
Ooh. Here's a stock that is sleepy, sitting near a 52-week low. Its potential for a turnaround early January is there. I mean, there isn't a lot of stocks at near 52-week lows. But remember, when you're buying laggards, they're laggards for a reason. Is that the companies maybe are struggling, they're underperforming to a certain extent. I mean, there's been a lot of plays. This is obviously talking food processing here, ADM. We know some of the consumer staples plays have not had a fantastic year. It's been rates holding them back. But is there the potential here for ADM to play catch up maybe in early 2024? I think so. I wouldn't want to be shorted it going into 2024.
It's definitely not something that I'd want to get short also. It's off this long-term support too that I just used. 70 looks like it's standing out. If it holds 70, doesn't look bad at all here. Also, I like to see this kind of volume change, right? A little bit of pops recently, especially on this downturn 75. Can you recover that 75 where you had a lot of volume come in right before that? Turn around at 76. If it clears 76, gets above this 200 exponential, it'll be looking really good.
I was at 9 o'clock already.
Yeah, that's what happens, Dennis, when we have a good time, man.
I thought it was like 8:45.
That's what happens, man.
Cow, the time flies when you're having fun here, Mitch. We always have fun together. One last thing, everybody talking the TLT. Absolutely, you got to continue to watch the TLT. To Mark's point earlier, it has been the bonds that have driven the bus here. We talked about the TLT potentially turning, and I said if it starts to get above 90, you've got to start thinking about owning stocks. Obviously, that has materialized in mid-November and has driven stocks. Again, there will be a time where the TLT will disconnect here. Once we stop worrying about inflation, stop worrying about rates, there will be the time where the stocks can rally without the TLT. But right now, the bonds have led the rally. We had the Rick Santelli bottom, also the Bill Ackman bottom for the opposite reasons, meaning Rick Santelli calling for rates to go to 14, which is absolutely maybe the most brutal call of 2023. And Bill Ackman saying, I covered my bond short almost at the same time. And Bill Ackman calling the bottom here in the bond market. What a fantastic call. Because we have turned, and that was the very day that we bottomed was the Bill Ackman bottom. So Ackman, you're so hot right now.
Ackman, man, definitely changed things around. We'll see what happens in the TLT. One thing that it's starting to get me a little bit concerned is I always point to this is historical reference on RSI. It doesn't mean that things have to change immediately, but have we gotten past that 80 multiple times now? Yeah, we've tried multiple times to pass that 80, starting to struggle. I'm going to look to see if this starts to change going into next year. We'll see what happens also on the Qs. That's definitely getting to the point where it's topped out. Like I mentioned, that 1.3% rally for Santa Claus rally is more towards 415, like right before that. And we're starting to slow down a little bit. We'll see what happens today, guys. Like always, stay with us. If you guys want to keep up with Dennis Dick, of course, tripledtrader, of course, give him a good follow. Of course, you guys know my tag at moneymitchbz. It's always been a great year with you guys. I do want to let you guys know that I will be taking a little bit of a step back. So you guys won't be seeing me tomorrow and probably into the beginning of the next year. But I'll be working in the background here, guys, doing some new things here. Like always, smash the like, guys. We're going to keep growing into 24. But definitely it's been a good time with you guys. Dennis, like always, my friend, thank you for continuing to mentor all of us, because that's the way I feel like the show really is that we learn from you, man. And we wanted to tell you that I especially truly appreciate everything that you've done for us here in 23 and want you to continue pushing forward, helping traders really kind of get that learning curve and really get to the next level. So thank you from myself to you. And I know that a lot of the chat would give you a big thank you, Dennis. So thank you, man.
Yeah, and Mitch, thank you as well. I learned from you too. I mean, we're always learning constantly from each other. I learned so much from our chat as well. The chat has been fantastic all year. Even the haters, I learned from you guys too. Because, I mean, we're in a constant learning. The one thing about trading is it evolves. And if you're not constantly learning, you will eventually be left in the dust. So I learned from fantastic traders like Money Mitch. I learned from fantastic traders in the chat. I mean, there's so many of you. You know, when we can't find the news on something, the chat always seems to be able to find the place. This is a community here, Pre-Market Prep. Yeah. We've built a community here. And I mean, you know, you guys make me a better trader. A lot of my, you know, gains come from you guys because you guys give us ideas. You guys help us, you know, to think through, you know, we speak it and we talk it through. But, you know, the trading ideas that come out of this chat are fantastic here. So thanks to everyone. Money Mitch, you as well. Obviously, you know, we're going to still be working with you. But, you know, you're talking about taking a little back seat and be behind the scenes for a little bit here too. So we wish you well with that too. And obviously we're going to keep, we'll bring you back on here too. So it's not just like saying goodbye to Money Mitch here. He's still going to be hiding in the background too. And yeah, and we'll go from there.
You will have a show tomorrow. No worries about that, France. We'll have AB here, so don't worry.
We'll
about
be
that.
here. We're here tomorrow.
Yeah,
just we're here tomorrow.
Fill in France's question there. But yeah, thank you like always, man. It's always great to have you, Dennis. Go do what you do best, my friend. Get to your trading action and enjoy your New Year's also, my friend. Take care. All right, guys, that's going to bring you over to live trading. That's coming up next. Like always, we're going to keep growing here. Going to keep taking it to the next level. Like always, I did throw up multiple times here today the Stock Traders Almanac. If you don't have one for yourself, you might want to. A lot of interesting statistics to really kind of based on. And if you like the approach of like, let's say like Ryan Dietrich or maybe Cameron Dawson or some of the experts that we always hear about, Jeffrey Hirsch, right? Definitely take a look into the Stock Traders Almanac. That's what it's all about, and it's available to you guys right now. So if you guys look in the description below, you'll also be able to get it there. I'll see you guys next time. Now to bring you guys over to live trading, getting after it. I hope that you guys enjoyed me bringing a trade, right? Like always, I like to bring you guys ideas. Of course, this is not investment advice. This is informational purposes only. Opinions do not represent those of Benzinga, and hosts and guests may maintain positions in the securities discussed today. Now to bring you guys over to live trading. Smash the like, guys. It's always been great with you guys. And we'll see you guys on live trading. That's coming up next. I really hope somebody new. And if you haven't gotten the chance to check out live trading before, come on over. Come check it out, team. We'll see you guys over there. And like always, let's keep going right here on Benzinga.